It's a new world being built at the same time. And it doesn't need to destroy the old world because we're all going to migrate there. And what we're seeing is that's what network adoption is a migration. You and I have just talked about, well, do we really need a bank account for most of our savings and investments? No. Okay, so you've now, 75% migrated. Okay, that's amazing, right? And you've migrated to another world that functions really well. We're still testing it, but it functions really well. So what happens is over time, people become less reliant on the old world. And this is what people miss about the central bank digital currencies. They're actually making it easier for you to migrate to the new world. And I think that's purposeful. I've had conversations with the Department of Defense and all sorts of people. They know, they're fully aware of the risks that the leverage has within the system, the interconnectedness of the financial system. They're completely aware of it. So for this to be a way for the system not to blow up, it ends with a whimper and not a bang.
The cryptocurrency market is juggling between highs and lows in recent times. The overall crypto market volume over the last few days has decreased by 22.79% to $69.25 billion. The world's most popular cryptocurrency, Bitcoin, was barely 1% at $42,390, and Bitcoin is down about 6% in 2022 so far. Also important to note is that Bitcoin is down about 35% since it peaked at almost $69,000 in November last year, as risk aversion grows with the Federal Reserve and other global central banks starting to tighten financial conditions and remove pandemic-era liquidity from the system. On the other hand, Ether, the coin linked to the Ethereum blockchain and the second largest cryptocurrency in terms of market capitalization, also declined 0.36% to $2,924.22. Similarly, Binance coin dipped about 2% to $413. In today's video, former Goldman Sachs hedge fund manager and cryptocurrency bull Raoul Pal analyzes the reason for the current price action in Bitcoin, Ethereum, and other cryptocurrencies, and the possible scenario for 2022. Hello and welcome to Money Talks. In today's video, Raoul Pal examines the Bitcoin versus Ethereum debate, increasing institutional adoption of crypto, and how the future looks for the crypto space. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
Look, it's a nice narrative. And if the technology is as powerful as we think it is, and it has network effects, it will go up in value over time. Does it offset the central bank balance sheet? It looks that way, but who knows? It's an exponential bloody asset. It goes up anyway. It should do in theory. So yes, it probably is a long-term store of value, but who just wants to store value?
Talking about a comparison between Bitcoin and gold, Raoul Pal believes that a combination of Bitcoin and gold in an investment portfolio is always a good idea.
The combo, if those are your concerns, then the combo of gold and Bitcoin is actually a nice portfolio. It's actually pretty decent. And you can sit that quietly. Gold dampens the volatility somewhat. Crypto gives you upside. Super interesting. But to talk about how it's taking market share, and it is, because I'm seeing all the family offices allocate outside of gold because of it's just storing it, moving it around. It's bloody clunky and experience in the contemporary age. And like one of my clients for Global Macro Investor is a famous, very elderly, well, in age, not in mind, Italian industrialist. And I mean, he's a gold guy. He's a gold guy. He grew up having to escape the war, into Switzerland, across the border from Italy, blah, blah, blah. So he's gold guy through and through. I mean, his crypto position now for the last 2 years has been 5 times that of his gold position.
Paul believes that Bitcoin and Ethereum benefit from Metcalfe's law, which states that a network's value is proportional to the square of the number of nodes in the network. In other words, the law claims network benefits from adoption, and Paul said that the metrics have been slow in 2021, thus the current PA. Ethereum has managed to outperform Bitcoin with a 4 times increase, according to the data provided by the former hedge fund manager, due to decentralized finances, or DeFi, NFTs, and other strong narratives revolving around this network. This has helped ETH to maintain its transaction volume. Raoul Pal also shares his perspective on stablecoins and how Bitcoin has made transactions much easier.
I think this is going to be one of the realizations that a lot of people have, and you're not the first person I've seen to have the same realization, which is you sell something in crypto and you go, well, I don't need to put it in my bank account. And then you realize you immediately flip it into a stable coin. Within 5 minutes, you're earning yield. And you're like, so all of that, I have to go to a middleman, I have to pay them to get access to this product and then that, and the bank takes 3 days to clear. It's like, well, it's all nonsense. Why the hell would you even bother? And I've seen a lot of people go through this. It's like, I just paid my physical living bills using my bank account. But, why bother with have your assets in a bank? I get it. Makes sense.
Raoul Pal also shares his thoughts about the regulation and the concept of securities in cryptocurrencies. Just weeks ago, Paul said that he believes there is a reasonable chance that the crypto market capitalization will have increased 100 times by the end of this decade. Hoping he's right about that is perhaps something on which we can all agree.
The truth is whatever Jamie Dimon says, JP Morgan's scaling crypto massively. They're banking crypto firms. They have, I'm speaking at a JP Morgan event. I'm speaking about crypto. Goldman's doing the same. Everybody's doing it. All the investment banks, all the asset management firms. There's no way you can ban it, and there's no intention of banning it. They kind of get it. And I think, at national security level, they understand it's actually useful, right? It's useful. Like gold is useful. People don't really want to ban gold because it's bloody useful if something goes wrong. So I think regulation is the issue they've got is the 1934 securities law. So that is what is a security use, what's not. Then it only allows certain people to have access and others can't. And that becomes a very unfair system because, all rich people get rich off VC and early stage investments and the average Joe doesn't. So basically what happens is the VCs dump the stock once the company goes public, and many of these don't do well, which is what happened in the SPACs. A lot of them just went down in price. Mm-hmm. So how do you level the playing field? Crypto's early stage VC that's liquid. Okay, great. What you need to do is just give them a bloody warning to say, you're about to do a trade. Do you understand that this is a speculative asset? You can lose all your money. That's what like you do with options. If you can trade Robinhood options on Robinhood, why the fuck can you not trade crypto and anything you want? I mean, that's madness.
India is one of the biggest and fastest growing markets for digital asset adoption. However, regulation still stands in the way, and the journey has not been an easy one. Raoul also discusses a chance to get the big picture of crypto in India. That's potential for mass adoption, where regulation is going, and how NFTs are beginning to play a role.
So, India had been making, as many countries, making angry statements about crypto, like we should ban it, and they kind of banned it and not banned it. They unbanked all the crypto exchanges one period of time, a few years ago, and there was a big movement coming through, driven by Narendra Modi, the Prime Minister, that they were probably going to come down hard on it. The budget gets announced yesterday in India, and the budget says, crypto, they're virtual digital assets, and they're not currencies. So it doesn't conflict with the rupee. So we're like, rupee, the currency, different thing. These are virtual digital assets, and we're going to tax them at 20% of capital gains, 30%. Now, it's a high tax rate, blah, blah, blah. Doesn't matter. It's the start. Like today, Thailand announced that it's moving its capital gains from 15% to 0 or whatever it's doing, because that's what will happen. But you've basically been given the green right to 1.3 billion people, and Indians kind of understand the value of gold. They understand these savings instruments, and they're, that kind of top 200 million people are highly educated, very mathematical. I mean, Bitcoin's like perfect for them. They're big with technology, and they've usually got friends and family who live in different countries. So the diaspora wants to send money to each other. All of this, you want to send your auntie some money. immediately. It's a shit show to send it to India. I'm half Indian, so I know what it's like. But stable coins, I could send it to my cousin in 2 minutes.
The rise in inflation in the US, Paul said, and the stagnation of wages could be pricing out new users from entering the space. Thus, why hedge funds and institutions will continue to play a big role next year, as they will have enough firepower to drive a new rally. And that brings us to the end of today's video. What do you think about Raoul Pal's comments on Bitcoin as a store of value? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.